This is Justin Pulitzer. This is my weekend video review for Sunday, May 31st, 2015. A lot to cover. I'm going to jump right in. So I had been discussing the levels we're at here for a few weeks now, and I've been discussing coming into these 1.618 Fibonacci extensions up around 213.40 to 214.17. And you can see here we kind of kissed into them a little bit and we started to roll back. And that should be no surprise because I was saying that I thought it would look a little bit like this. The breakout of range, the incrementally higher high, and then roll back to mid-range. And if you look at the measured move for this coming week, it's about 3 and change. It would roughly take us down to mid-range and close to the 100-day moving average, which has been support here several times. Here we traded a little bit on the wrong side of it, but ultimately resolved higher. Another hold here. So I'm thinking traders are going to, if we are going to continue on a down move and take out these lows, and I do believe this bar here is the key for range because it's the big emotion bar, so to speak. It took us out of range up here and into here. So I would say anything below this 210.20 puts the potentially the 100-day moving average into play. And if we do want to overshoot a little bit lower, I think that these lows here could be targeted around the 206.76. But I do think that this area will hold, and there should be some memory there if the market is to quote-unquote stay healthy. I would say, though, if we do lose the 100-day moving average, a lot of traders are going to be targeting the 200-day. So we'll see what happens and kind of go with or play against. I am thinking that this area will be right or right out for a buy the dip long. So I would be looking, if there is some type of a move early next week, to buy some type of put spreads or put ratios on the SPY for a little bit of a shake and bake move down. And that is my thinking here, that we might repeat this pattern where we come down and then bounce back up. And that's going to be a bit of a theme in a few of these stocks that I'm going to discuss. You'll see what I talk about in Facebook. Although I do want to give the caveat that if we do take out this high of day here, this 212.91, that's this big emotion bar day and this like close to these high days, the risk then becomes still higher for a move potentially to the channel high. And I don't really think the market is super duper bearish, although a lot of people seem to be thinking so. They get caught up in like one day's price action. I don't think one day makes a trend. And if we do take out this level, I do think that these highs aren't really all that secure and they look a little poor to me. And we could do something like have the blow off all the way up to the channel high. So that is what I'm looking for and on guard for this week. If you take a look at some of the other moving averages, let's look at IWM, for example. That isn't showing tremendous amounts of weakness either. I know that there was some talk on the stream of this being a bit of a head and shoulders. I don't really see that pattern, so to speak. I mean, I guess you could make the argument that this is the left shoulder, this big part up here is the head, this was sort of forms your neckline, and now you're making a lower high with a right shoulder. Yeah, I mean, I guess I made the argument just now myself, but the argument I'm really thinking is that this is more of just a lower high here, and if this gets eclipsed, this sort of new downtrend we're in, after failing to recapture the up channel, then I think the move could be back up higher to the all-time highs. I haven't heard a lot of people talking about it, and sometimes when it's not talked about, that is this sort of pain trade. I believe that the vulnerability of IWM, if it does come down, would be to retest these lows close to the 120, 121 area. And, you know, if those levels fail, I've been discussing for a while this 119.39 and the endless discussion of 117.37, where I would be setting up for right or right out in size. I do believe that this is a big volume distribution and there will be a lot of price memory. There'll be a lot of people afraid and bearish because we'll be coming from a lower high and and then making still a lower low, and could potentially be in the midst of a head and shoulders breakdown. And I'm sort of starting to talk myself out of the trade, but I do think that this area, will have price memory for some type of a bounce throwback, maybe to that neckline where there was that quote-unquote breakdown back up to the 120, 121 area. So that could be some decent points. Or if you want to play it sort of the chicken hawk way, like I've discussed in the past, sell some out-of-the-money puts into a down move with some volatility down near some other reference support, out-of-the-money puts. But IWM, to me, not looking too tremendously bearish here. Held the 20-day moving average, although we did close roughly a little bit below the 50. I had said that I was looking to see how this closed, if it was going to form a hammer. It did, but less of a elongated tail. I would have thought that this would have been a little bit more bullish if we closed up near these highs. Here, to me, is a little bit more middling, although it was in the context of this range. We're still above this sort of above this candle and sort of midway between these. So it's really not, I would say it's sort of a push here, although leaning in the air of being a little bit more bearish in the sense that we're below these highs. So if we can clear that 125.47, then I think we're going up to to retest the old highs. I don't think that those are going to be particularly super duper amounts of resistance, so there could be potential for higher, but I am looking for this to possibly be a right or right out buy for lower, or some type of a right or right out short for a snap back down to these lows. So that's what I'm going to be looking for this week. Q's not nearly as bearish, actually showing a lot of relative strength and bullishness. Still over this 109.42 old reference high, well into the upper distribution of prices here. And I know that I think that this was just some responsive selling back at the old all-time highs. Remember, I said that there'd be a lot of talk on the stream this week that there could be potential for a double top. I'm not necessarily in that camp just yet. I would be a little bit more cautious if we lose the 109.42. I think that the 50-day would quickly be in play. You can see that's also roughly the backside of this old unofficial regression line that I drew in, although those tend to be the ones that work. It would also roughly slide us down to where the volume distribution is. So that is kind of where I would be looking for this mid-range to be targeted. Maybe do something like put ratios or put spreads. I like the put spreads, particularly in the weeklies, considering that they have the fastest of theta decay. So I would be looking for something like maybe the 108s and then shorting the 106s or 105s against that, where there's some previous reference support. And that would be the put ratio that I'd be playing. VIX did what I said it was going to do last week. I said we were getting really close to these reference lows. I expected there to be some type of a throwback. We have done that. I don't necessarily know that the VIX is in yet an up channel yet. I would say, though, that I still think it is too low to sell premium. I would only be interested in that and some type of a test back into it at the bare minimum 17s. And that would be a trend line snap, so we might be then kind of transitioning to a period of more increased volatility, so you might want to be a little bit careful. Currently, we are still below the uptrend. It kind of resisted there. We're well below the 200-day and the 100-day moving average confluence. I do expect this to be some type of a resistance. You could see it was a little bit here. We did punch through it a bit, although it was unsustainable the last few times. And then here it was dead to rights as soon as we got above there. So I would be looking for some type of a right or right out selling of premium play, or some type of a shorting of VIX play. If you're long, let's say, S&P puts, and you're looking for a spike in volatility, I would be looking for the trend line as a right or right out place to at least take profits and potentially to try for a short in premium. TLT. This is another one that I've been discussing that I thought was going to find some traction down here. It did. It started to kind of get to my lower levels of support. I was actually looking for some type of an excess move to the channel low, which coincided with one of these Fibonacci moves or the measured move. We didn't quite get there. We are rallying from a bit of a weaker base, although it is kind of quote-unquote close enough for government work, and considering these are government instruments, I guess close enough is good enough. And we kind of are just rallying back up to a prior uptrend line and like some resistance here. So it wouldn't shock me to see some type of a peel back, although I am eventually looking for this gap to fill and to retest the channel the channel high, so to speak. If it can't do that, I would say it's very telling. One of the things, though, that has me thinking rates might be going lower is that the economic data that we have been seeing, particularly with GDP and consumer confidence and the like, have been weak. We do have a non-farms payroll coming up this Friday, which I think is going to be really super key, but you know that GDP data was really weak, and I think that if it was a concern about just interest rates, rates here should have gone higher and prices here should have gone lower if the concern was really the Fed. I just think it was that the market didn't like the economic data, and that's why rates went lower. It made it less likely that the Fed would raise rates as opposed to them actually pulling the trigger. I think that they're using some type of a tough talk, so to speak, to kind of talk the markets out of boiling over, and they want the market to kind of simmer down or correct a little bit so that they don't have to kind of act, so to speak, in the face of these weak economic numbers. I guess they can kind of shadow box the market with tough talk. Crude oil is bullish in my opinion. I'm looking for it to come back up to retest 75, which is the 50% Fibonacci retracement. It's also really where this major breakdown took place. I would be loath to think we can't even get back up to the 38.2, which is like sort of the bare minimum retracement of something that's coming from a bullish market to a bearish market and looking to bounce. So I believe prices of oil are going higher. Yeah, that's at odds with Goldman Sachs. I know that they're the geniuses at 110 who thought we were going to 200, and we wound up crashing down to 45. So I don't necessarily know if they missed it on one way, they're going to get it the other way. I know that they're looking for like $20 or $30. I don't really see that happening. I do see the risk being down to 54.24. If that level is lost and we come down lower, then I'm going to start thinking maybe we are going to see recession. It's not really sustainable or healthy for oil to be that low. I mean, I guess we could kind of overshoot mid-range, but for me, for the bull thesis, they need to hold 54.24. As long as that level is holding, I think that the risk in oil prices are higher. If we lose that level, then I'd kind of say it's GTFO, and insert your expletive there. So one of the things that I watch for in oil is Exxon Mobil. It sort of was the biggest company in the world until Apple ate their lunch for them with the iPhone. I guess more people are buying iPhones than driving expensive SUVs at this point. Whatever. Just keep this number in mind here, 8603. Anything below there is a little bit more vulnerable to lower. You can see we checked back mid-range. Oil has still been higher than Exxon, although Exxon could be a leading indicator, so just be a little bit careful. If we can kind of get back over there and come up from a higher low and then eclipse this 90 level, then I would say that the pattern is really shifted from lower highs and lower lows to forming higher highs and higher lows, and I would say that the oil trade is sort of back on. One of the names I do like, though, however, here is Enbridge. You can see this was in a bit of a channel here, and we kissed the high. We've kissed the high here. This was the kind of the blow off based on news. This is when they were going to consolidate their assets, and I've just been playing by the dips with this. I am looking to buy this somewhere in the next couple of points for right or right out play for a move back up. I do eventually think that this 57 high here is going to be retested. I don't know how we get there, if it's going to just be choppy, but at some point I do believe we tested. It was sort of similar to what happened in Kinder Morgan, if you guys want to go back and take a look at my thesis on that. Excuse me. IBB is the ETF for Biotech. We've held some key levels here. We are back above the downtrend line, although be it just gingerly, so to speak. We have not taken out this last swing high to form the W pattern. I really need to see this 368.26 break for my call for this to go higher, although you can see we could kind of fill up this wedge and just incrementally go higher. If this does wind up coming lower, somewhere in this distribution, I think, would be a good area to start selling some puts. It would be starting to form lower lows and snapping a neckline. I do think that this event here, if this is lost, this low, this 330.60 is shortable with put spreads or put ratios down to close to that 200-day or even close down to the channel low. wait for that IV to pick up too. You don't want to be selling that into, you don't want to be doing it here. You want to be doing it into weakness, particularly for the ratios. The spread's okay. Ratios, you got to be careful. I do think that there is going to be a resolution of this soon, either up or down. Either way, I want to be rock and roll playing it. Gilead, I am bullish on this stock. I had talked about this now being a buy the dip stock. I did say to be a little bit cautious here, though, after so many multiple days up. It would not shock me to see this want to come back down and retest the breakout area in the 205, 206 area. This confluence of moving averages to me will be a buy, right or right out buy all day long, every day of the week and twice on Sunday if the market were open, but I do think this area is good to buy. I am playing for, I do believe we are going to see the channel high. I think we're going to see these old highs back up here, by the way, at close to 117. Maybe with an overshoot, I could plot some types of Fibonacci extensions. I'm sorry I didn't do that for this video. It will be in the next or possibly in a post during the week. But I do think that the stock could come up here. I just think it's a little bit harder to play because we've come up so much. If you're going to play this, the cheapest and easiest way to do this is with call spreads. The IV in a lot of these stocks are low. That's really how I've been playing a lot of these names, just with call spreads or flat out directional long premium plays. I know this is heresy for anyone who follows me. I'm always a premium seller, but when it's too cheap to sell, it's just right to buy. So that is how I'm playing most of these stocks. Apple. Oops, it would help if I could type. Apple, same thing. I actually was playing this with a risk reversal call spread. I was long the 129 calls, short the 133s, and then short 123 puts. And I just recently bought back those short puts just because the IV had gotten so low, and more than half of the, premium had been used up, and it wasn't, and I still had sort of half the time to go. So if this does wind up rolling back over and Apple comes down lower, I'll be looking to resell those puts when IV gets up closer to the mid to high 20s, even low 30s would be fantastic. But if it does wind up going, I'll still make money on it with the call spread. I'll just have to make it sort of on the spread, not with the enhancement. But that is my thinking on Apple. As long as we're above 129.85 on a closing basis, the path of least resistance is higher. If we get below there, I think that we can easily retest the 50, potentially the 100, and maybe even the channel low. Although you can see that's one of the reasons why I think Apple has been so choppy, because we didn't recheck it here. We sort of rallied ahead of time, and my thinking, when we rally ahead of time, the launch points are weaker. And that's why it can't go. There is a developer conference coming up. I believe it's June 9th. So there should be some IV pumped back into those options, so to speak. And I do think that there'll be an opportunity to sell some premium expensively. If they rally it into the event, the risk is then, lower. If they dump it into the event, you might want to take a nibble and see sort of a do the opposite type of a situation. Google, just weak, choppy. Like I said, I thought this would be just hum-de-dum-dum-dum. One of the things I think that is hurting Google is actually Facebook. If someone had asked me, this guy Johnny on my stream, he's quite active. I always am happy for his participation. He had asked me one day if I thought that Facebook could eclipse Google, and my initial instinct was to say no. But once I looked at the numbers, Facebook has much faster revenue growth than Google, and I do actually believe now at some point that Facebook could eclipse Google. I know it sounds crazy. They're going to be adding in mobile payments, though. They just made this deal now with newspapers where they're going to be placing, most of their contact through Facebook, and that's going to be a whole new monetization in terms of ads. I believe the thing that's amazing about Facebook is the ability for them to just create new business lines, and they're worth $1 billion overnight. I do also believe that the Snapchat IPO, when that comes out, is going to make Facebook look exceptionally cheap to the market. They bought Instagram for $1 billion. I've heard estimates of the thing being worth $37 billion. And that is, I think, going to kind of validate the spend that Zuck has been putting in. That said, the stock has been really, really choppy. It's prone to these fits, these fits and starts. And this pattern here to me is starting to look a little bit like the pattern here. You could see we had the run up here, the extreme sell-off, similar to here. Here we sort of had the false dawn rally looking like this, chop, pullback, and then a pullback again, and then rally to new highs. So let's see if we pull back here like we did into this situation here. Although this was 50-day moving average holds, here you can see we are below the 50, and that has been resistance, so that is a little bit different this time. But I believe that this is going to be just in a range, and it could be it's sort of like buy the dips, sell the rips, until we get some clarity with earnings or some type of news that can move the stock. I've been selling puts on this, and that's sort of been my long proxy just because it's been so choppy. It's easier to hold over than common. I think also one of the reasons that have been weighing on Facebook is this piece of junk Twitter and its cohort in LinkedIn. I'm going to discuss that in a little bit. You can see we're kissing these lows. There is risk down to these lows to the 34. I did discuss that if the market does something like really, really fall out of bed, and I don't want to scare too many people with this, but you should be prepared for this. This stock could really come back down and completely fill up the triangle down to 29 here. I don't think that's going to happen. I'm actually betting it's not going to happen. I do have a small long in Twitter. I've been sort of nibbling, and I've said that I believe that the stock is going to be dead money for a while, but one day you're going to kind of wake up to a jackpot. Either someone's going to want to take them over, or there'll be some type of a news event, or maybe it's their earnings, and I do believe the stock is going to get back up somewhere between 44 and 46. I'm just calling it 45. I do believe that will eventually happen. I just think you're going to have to really tough it out for a while with it. Do mind yourself, though, that this is, if the market really does fall out of bed, this could have another leg down. LinkedIn. Coming into some interesting levels, meaning interesting levels to buy. I wish this kind of just got down a little bit further here. I was looking for this 61.8 Fibonacci retracement. You can see we may wind up overshooting here down to the primary trend. I'm looking to buy this sucker somewhere in the 170s for right or right out in the size at that level. It's also on a larger time frame close to the big 50% Fibonacci retracement. If that snaps, no big thing. We just flip and go short and look for the move down to the 61.8 and 140s, probably with put ratios. I do think at some point, before that type of a move happens, I do think we will at the very least re-challenge the gap up here close to 209. So on this type of a move down, I'd probably be inclined to sell puts, actually, as my long proxy. And near dated, and then, when the stock, if it does rally, it comes back up, and you take them off. If the stock does wind up dumping, you get it at cheaper levels, or I don't really ever like to take stock, so what I'd probably be doing is looking to do some types of rolls, but if it's near dated, the kung fu is a lot easier than if it's long dated, so to speak. Amazon, exactly what I thought would happen, just chop. I did believe we'd hold this 50% fib, we'd bounce. We haven't taken out this interim swing high here. You really need to see this 439 get taken for a retest of the highs. We're just kind of chopping. We're kind of killing rough time, so to speak, getting close to the channel area. So it's going to kind of have to either take off here again, or we're going to break the channel. It doesn't necessarily even have to be by price, but it could be by time. I believe Amazon is going to go up and retest some even higher levels here, up to this 480, 473, which is the 1.618 Fibonacci extension. It just may take earnings to do it. Or it may happen later in the year, maybe around Christmas. I'm a little low to buy these stocks this time of year. Any retail, it's sort of, they don't do well, particularly in the summer. They're sort of more later in the year types of plays. BABA, choppy, messy, blah, blah, blah. We kind of got close to the this breakdown level. I had been looking for a little bit higher, somewhere between 98 and 100. Instead, it decided to roll back over a bit and retest the breakout area. I do believe that this stock now needs to hold above 89.29. Well, let's just say 89 to 90. We're already a little bit below 90, and we're a little bit above this 89.29. If it gets, excuse me, If we close below this area, I think that it's going to get a little bit more choppy. I think the easier way to play this is actually with either call spreads, or if you want to sell puts on down moves, I think that that's probably the easier way. If we lose here, it's possible we do wind up pulling back to the low of that earnings day, close to 85, which is around the 50-day moving average. It would also be a retest, a kiss. See, we broke the down channel. It might be a kiss back to the down channel, and also some reference lows here in the 87s and 86s. I do think there'll be some price memory around here, and it'll wind up being choppy, and it'll probably be a good right or right out type of a play, buy for a buy. Too late to short. It's been down too many days. If you want to play it short, put ratios are the way to do it, preferably for net credits. Baidu. Junky, choppy, same thing I said would happen. I thought we'd get back up to the channel top and roll over, and that is exactly what happened. As long as you're below these these lows here, this like 202.20, so to speak, up to 204.50, because that was this high, the path of least resistance is just going to be lower into the lower end of range, and then maybe back. I think it's just going to be chopped like this was. You can see it just kind of ping-ponged range. I think you can play it that way as range ping-pong until it breaks range, and then it's a go with in either direction, either up or down. Let's do FireEye. FireEye has an analyst day on Wednesday. I believe the stock is really bullish. I mean, the market was down a little bit. The stock is making new all-time highs. I'm looking for a move up to the channel highs. I forget what strikes I'm in, but I'm playing this with a call spread. I didn't pay very much for it. I think it was like $1 or maybe a little bit more or maybe a little bit less. I have to check where my fills were. But I am playing for, I believe, a move up to about $50. So we'll see what happens. I think actually the play, this is it. I believe it's long 47 calls, short 50 calls, and I paid, I think, $1 for it, or maybe it was like $1.05 or 95 cents. I don't remember. I was doing so much stuff this week, I don't remember. But if it does roll over, I was going to sell puts to finance it, but I didn't want to do it with the IV being this low. So if we do wind up rolling over and it comes back down, then I'd be looking to sell some out of the money puts, somewhere in probably the lower 40s, probably for something like down here in like the mid 30s. I'd be looking to sell those strikes. That to me would make a lot of sense, and I'd be playing it that way. Palo Alto, another one in this space, making new all-time highs, so that kind of bodes well for the sector. CYBR just kind of chilling in this bull flag above the sort of like hanging out around the channel high. 50-day moving average, really key. If we kind of lose this low here, this 59.42, I'd be a little bit more skeptical. Maybe there's a move back into range on this one, but the other two are definitely looking a little bit more bullish, although I kind of like them all. Green Mountain coming into my buy spot. We didn't do it this week. Maybe we do it this coming week. I had said somewhere in this next 10 points I think is going to be the buy. The Coke bid gap fill is 80.88. I am going to be selling puts here or buying shares or whatever for right or right out type of play in size. If it's lost, no one ever got killed, from, as my buddy on Shadow Trader, Brad says, jumping from the basement window. I don't think you get killed, trying to buy down here if you buy it right. So that's what I'm looking to do, to buy that for some type of a bounce. I know they're having problems with their cold product. It's overpriced. I think that a lot of people aren't going to pay for that, and that's just the story. IBM consolidating in the gap, looking back below here, but I do believe that this stock is going to find some support somewhere between the 50-day moving average and this 165.35. I'd be looking preferably the 165.35 if it could get back down there to do a kind of buy the dip, right or right out type of play for a bounce. If it loses there, then right or right out short maybe for the channel low. Sounds simple enough to me. Netflix would help if I typed the symbol correctly. Would be, like I said, just choppy and consolidating up here. I do believe at some point it's going to want to come back down and retest into close to this earnings gap low. It's really going to be a hard play because this is no one who's ever bought this stock has ever been wrong at this point. Everyone who's short is still wrong. It got above my target of this 596.67, which is the 1.618 fib. This was on some China news. It's possible that this does roll over if the market rolls over. I'd be looking for a play at the 50-day if we can get that low. I don't know if we will. It might just want to chop and kind of let the moving averages catch up. So that is my thinking with Netflix. I think it's a little late to be first buying here. It's possible it goes higher, but for me, this is the deep end of the pool. If we're going to have a market correction, do I really have good trade relocation first buying the stock at 624 after it's made this entire huge move? I'd be looking for some type of a pullback to buy the stock, although that being said, stock looks pretty bullish. If you're long, maybe take half, put on some type of protection, and look to sell some pops. If you're long, I would stick with it as long as this bar date, this kind of bullish candle holds. So I guess 615 would be the stop. And Priceline, I didn't cover that last week, and everyone always gets their panties in a bunch if I don't discuss it. So we had a false breakout of the channel, broke the channel low here in gap fashion. Had been choppy, retesting this low. Lower high, potential lower low, although I do believe that somewhere in here should find some price support, the 200-day and the 100 MA confluence. I would be really looking to buy this a little bit lower if we can get like somewhere down closer to the 61.8 or back to retest like close to this 50-day moving average. I think that area should support mid-channel for some type of a throwback to the mean. Tesla. I told you I'm bullish on prices in oil, so that means I'm bullish in prices in Tesla. I think the stock is going to fill this gap up to the 257.70 and potentially back up to the 265, and then after that we're going to see. I believe the stock is going to make new all-time highs. Summertime madness is sort of the way to play Tesla. It's always bullish in the summer. It sort of peaked out last year around the horse show. I remember because I was trading it, and it was actually that was part of the subject of the Wall Street Journal article that I was featured in that particular round in Tesla. I am buying the dips in this. If this does wind up pulling back, it's I think buy the dip. If you want to play it, the IV is again real cheap in here. Maybe do some call spreads, and I might do them this week. If I do, I'll post. I'll let you guys know. I believe Tesla is going higher, though. So let's end on Visa. So Visa has been really choppy. I've been looking to buy this. I knew when I bought that call spread, I had said the 70, the 75. I was looking for the channel high. It was only like $1. I knew there had to be something wrong. I thought it could have just been the IV environment. So I'm sort of, if I lose the buck, I lose the buck. That would have been my stop loss in terms of the shares anyway. So it's sort of, the risk sort of takes care of itself, so to speak. If this doesn't wind up punching out, I'd be looking to buy the dip closer down to this like 66.77 area, the channel low and the 61.8 fib. It's also a gap fill. I believe that's a good area for right or right out. But, stock's been just acting the stock has just been acting choppy. And maybe we do get some resolution up. I think it's just been a function of the market being weak. Anyhow, let's end it there. Please be sure to follow me on Twitter. My handle is @JustinPulitzer. If you like this video and you found some value in it, please favorite it and retweet it on Twitter. Also, there's a little like button right underneath this video here on YouTube. Be sure to check that. And leave me some comments. Without you guys, I don't really know what resonates. I'd love to have the feedback, so please give it to me. And let's have a good week, and cheers.